Guys, welcome to a brand new episode of Smart Money. Now, can you own part or a unit of a home if you can't afford the full home? The answer is yes. Today we're here to talk about fractional ownership of real estate. Now, the fractional ownership market in India is currently valued at $500 million and is poised to surpass $5 billion by 2030, which is a 10-fold growth according to analysis by JLL PropShare. This week, SEBI introduced guidelines for small and medium REITs to regulate fractional ownership of real estate. The minimum subscription amount for an SM REIT's initial offering is 10 lakh per investor, offering a more accessible entry point than the current norm. Today, we try and understand how to navigate this market. We have some key stakeholders joining us. Gulam, Senior Executive Director at Knight Frank India. Anand, Narayanan, the founder of AltDRX, Saurabh, Vohra, who's the co-founder and CEO of ALYF, and Sudarshan Lodha, who's the co-founder and CEO of Strata. So across the ecosystem, I have four of you here. Thank you so much for taking the time out and joining me on the show. Gulam, first let me start with you. Just set the context, right, for the uninformed. What exactly is fractional ownership and what are the different companies that are into fractional ownership now?
Well, forever, the investments in real estate, especially housing, were supposed to be very high capital requirements for individuals I'm talking about. Of course, institution has a different view altogether. But for people like you and I, investing in real estate meant buying a house to start with or maybe a shop somewhere. But then while REITs came in some time back, that was something which was giving a ray of hope for normal, regular investors like most of us, that we can also come into real estate someday. But even that was again an institutional play with very large entry capital required. Now this SM REIT that has now come about, SEBI's recent changes that have come in, are opening up a new platform altogether, almost a new asset class, which is fractional ownership of real estate for most of us who want to really widen the scope that we have for investments. So this is really I would say, a very great opportunity for all of us to also look into this asset class. Of course, it's going to take some time for us to understand and learn, but at least it's a great opening, and I'm sure you have many of these stakeholders already on the platform. And going forward, while your normal REITs are very difficult to enter into, but this is something which is opening up a new arena for all of us.
Okay, so there are different modes of investing into, doing fractional ownership, right? So there is fractional ownership in commercial real estate, there is fractional ownership in holiday homes, for which Saurabh of ALYF is here with us. And of course, there's within commercial and within residential, there are many more options. So, Saurabh, you tell us, you are into holiday homes fractional ownership. Very interesting concept. So if I can't afford a holiday home in Goa, what I can do is buy a part of the home, but I can also use that home to go and holiday. So tell us a little bit about what the benefits are.
So, Sonia, basically we started ALYF with an objective of democratizing this holiday home to the population of the country. Currently, only 0.1% population of family own a holiday home. So this asset class has always been limited to only HNIs and ultra HNIs of the country. So with ALYF, our investment always started at 10 lakh rupees. So with that, you can now own a holiday home, make rental yield out of it, enjoy the capital appreciation, plus get to use it for a few days in a year. Because we always understood anyone doesn't use their holiday home for more than 15 to 20 days in a year. And with an investment like this, it's a mix of both, or you're getting goodness of both the worlds, where you get to enjoy the asset and you make rental yield out of the investment which you do.
Okay, so what are the kind of rental yields that we're looking at if I do invest in a fractional holiday home?
So in a fractional holiday home, you make anywhere the gross return is close to 9 to 10%, which gives you a net return of close to 6-7%, plus few days to enjoy the property yourself. Yeah.
Okay.
So approximately 6 to 8% is what you make out of these investments.
6 to 8%. Yeah. Okay. Let me get Anand Narayanan, of the founder of AltDRX, into this discussion as well. Anand, that seems to be the grouse, right? That if you invest in a residential fractional ownership project, the rental yields are very low, but as Saurabh is saying, in a holiday home, the yields are 6 to 8%. Can you just explain to us, what are the different modes of fractional ownership that I can look at, and where are the rental yields the best?
Thanks for having me on the show, Sonia. Middle India, Sonia, has always grown to stories of your father, grandfather buying a home, and it's multiplied several times in value over a span of time, right? I mean, we have not grown to stories of us buying let's say, an office space and becoming wealthy. Real estate is about creating wealth. One component of that, Sonia, is about rental yields, right? So in real estate, I mean, I've been in real estate like the rest of the panelists for several years, and I've realized A plus B in real estate is always 11 to 12%, which would mean that A could be capital appreciation, B could be rental yields. In office assets, it's rental yields are stronger, capital appreciation is a tad weaker. Residential rental yields are a tad weaker, and capital appreciation is a tad stronger. But net A plus B is 11 or 12%. That's how it is. And one needs to go with what conviction is. People generally, Middle India generally understands residential far more easier. If the attempt is to democratize real estate, which is to allow everybody to participate, then I think Resi is a great way to enter this market.
Okay. So can you explain to us, A, what is the difference between REITs and fractional ownership, right? Where is the liquidity higher? Because people don't even understand the basic concept of REITs. Forget about fractional ownership. So can you explain what is the main difference and what are the pros and cons of each?
Sure. So, I mean, REITs is a recent addition, especially the small and mid-sized REITs, where fundamentally the greatest issue with real estate is liquidity, right? It's easy to enter, very difficult to exit. So REITs as a structure give the ability to list a portfolio of assets that have already been fractionally sold into a REIT market. So there are two ways that the regulator is extremely wise regulator. I mean, there are two things that have happened in the recent REIT regulations. One is what kind of assets can be moved into an SM REIT structure. So the defined set of regulations have been put, minimum asset size of 50 crores, minimum investor pool of 200 investors or more. Now, those kind of assets can possibly be moved into a REIT structure. Simultaneously, the regulator has also given a permissive structure, like a conditional exemption kind of a structure, where assets below 50 crores can be done in your existing SPV-based fractional real estate structure. So what this would mean is, if a residential portfolio of, let's say, to begin with 25 apartments built into a portfolio is where you start with, you can start with that, build that asset into a 50 crore portfolio, then eventually you'll be able to move that portfolio into a REIT structure. So it gives you a graduated approach. So where you can start with your fractional real estate model for operators like us, where you pool a portfolio of assets, fractionally sell it by issuing securities to investors, and then eventually move it into a REIT structure. So your current fractional real estate platforms will act as originators of assets, which would then feed a steady stream of new REIT schemes that can come in. Alternative, an asset is already 50 or 100 crores in value, that can be straight away taken into a REIT structure. You can make a public issue too.
Okay, got it. That explains it very well. I want to get Sudarshan Lodha into the conversation as well. He's the co-founder and CEO of Strata Prop, which is one of the largest platforms for doing commercial fractional real estate. Sudarshan, thank you for joining us. Tell us a little bit about commercial fractional ownership. What are the kind of rental yields that I can get? What are the challenges that, is preventing people from investing into this space?
Thank you, Sonia, for having me. So broadly, we identified a very large opportunity when we entered the business almost about 3.5 years back. Is everyone aspires to own these high rent yielding assets or their own offices where they operate from, or the warehouses or the factories where they eat or consume the goods what they are consuming at home and stuff. The idea was, how can we give these opportunities to them? Because for people who make about 25 lakhs to 5 crores a year as an average, these guys, it's not just lifetime's savings, it's sometimes lifetime earnings, which requires you to probably own a floor of this marquee building or, own that building as such. So the idea was that, and even if when you do that, you're talking about a concentration exposure in one particular asset altogether. So the idea was to offer this where people can have a diversified pool. They have a professional asset manager who can manage it, and bunch of other things, which comes as pros and cons as part of this. So in terms of the returns, what investors generate is anywhere between 8 to 10% as rental return and about 4 to 5% as annual appreciation. So bang on to what Anand mentioned, 11 to 12% is the bare minimum you would make in real estate in any form, in any manner. If you have a long gestation hold period of at least 7 to 10 years as a return standpoint.
So you're saying even in commercial fractional ownership, 11 to 12% yield is something that I can expect, or is that the best case scenario?
That's your bare minimum.
That's your bare minimum. Okay. Okay, that's pretty interesting actually. I want to know a little more about that. So Saurabh, you're saying 6 to 8% in holiday homes is the kind of rental yield I can get, and you know, Sudarshan is talking about 11 to 12% in commercial. So that's interesting. I want to get more viewpoints in, but let me just take a short commercial break. Don't go anywhere. Lots more coming up. In fact, we have many queries as well that have come in from our viewers and followers. So more on that coming up in a bit.